Good afternoon and welcome to the end of day review for today. And today is Wednesday, and it's the CBI day and also the FOMC minute release. And the CBI data come out at 8:30 Eastern time. We will look at the chart, see how the market move after the data release at 8:30. Let's get ourselves in perspective in terms of week. So we are in the week 15 of this year, 2024, which just means we are in second week of the second quarter. Right, so we are in the second quarter right here. So the second quarter will start from April to June. First quarter we all finish. And right now we see that the non-farm payroll on the first week of the quarter, which is Friday 5th, the market moved below that level. We can see that. But put that note into our journal, then we will know that as is the level that we need to keep that in mind. So that's the key level right there. Is a non-farm payroll Friday. Friday 5th, April 5th. Because I think the guy, he do research on that, he said that the non-farm payroll is a very key level. Excuse me, when it open a new month or a new quarter. Okay, for the option expiration day, we don't have anything until next week. And the CBI data, we just have it released today. Then the next event for it gonna be at 25th April of this month will be the GDP data release. So on the 25th right here, so on the Wednesday 24th, we're gonna watch for the last hour. That is the new knowledge for us, right? Before the new release or the critical or the high impact news, watch for the last hour of the day before to see any setup. We can show you right there. We can go right there. Yeah, we can show the one that we see yesterday. That's why we try to build a model against the day before and the day after. That's a good model. Okay, so no, that's it. Not for the it is today. We want to see the one for yesterday. Really? Okay. Hold on. All right. So here's the one for yesterday. Go back to an idea that we're gonna build a model the day before. That's the model, the day before. So here's the day before today, which is Tuesday. Today is the CBI. See, that was for last minute, and the key level is here at 52.29.25. We see that this level, we have a gap up, failure gap up, and then you have failure gap down, and it's around start the last hour. And you see how beautiful right here it rate the sales liquidity of the quarter two, which is the quarter two of the PM section right there. As soon as it rate, boom, it goes short sweep right there. So we can target right there. Just huge move right there for us. So that's the model we try to build right there. We try to build alright, we try to build a model the day before and the day after. So the model we try to build is the final hour of the day before a high impact news. That is FOMC. The first day we can see is CPI. Before that, we watched this phenomenal. We see the GDP, and now we see the CPI, right? And now we're gonna see. Let's see how it's do on the FOMC, and etc. So on and so forth. That's the model we want to build. So for the GDP, for the CPI, we see that's really work right there. And let's look at the GDP data on the 28th of March. Let's look at that real quick. All right, here's the setup or the screenshot that we took on March 28th, the day before the CPI data release. So we start to see the pattern now. Look, you see 28 right there. And look at, not CPI, excuse, we say the GDP data. So the last release right there, or currently the next day. So the 28 right there, and look at the 28 times 10 that we take screenshot right there. And look for the last hour. This is the GDP data release right there. And here's the high time frame, and here's a 1 hour time frame, and here is the 5-minute time frame. So we can see that is a a huge impact right there the last hour. So definitely we're going to build this model. We're going to build the final hour of the day before high impact news. In this case, it's GDP data, CPI data, and non-farm payroll. Yeah, non-farm payroll, which is the Friday. Let's see. Non-farm payroll. Yeah, so we see the level right there. Beautiful. The setup gives us pretty much the setup the same. Balance price range retest twice. So basically we have gap down and then gap up and then retest that, and then boom, it break that level one more time and boom, it go. So it's a balance price range retest right there, which is very similar to this setup. You have a gap up and a gap down. So it's a 4 breakout. Simpler, but it's not exactly the same. Yeah, it's called, I think it's called inversion fellow gap. For a gap up, gap down, that's inversion right there, and then boom. I think we do have that kind of set up in mind. So right here, so basically the inversion, gap down, gap up, and retest. It's similar, but it's not exactly right. Gap up and gap down, but there's no retest in this case. But if the setup fall in the last hour, then we took the trade right away. As soon as it break out the level, we put a buy stop. So that's an idea. So we're gonna build our own model right there. Basically, it's gonna be the final hour, right? We're gonna trade the final hour, and when we're gonna do that, the day before the high impact news release. So that's the idea we come up. We're gonna try to build a model around that, and we're gonna see the gap, and we're gonna identify the key level. When it break that level, we're gonna go. Depend on, the time we know right now depend on the location, whether we go long or short, depend on the setup. If the auto flow bullish, then we go long. But if the auto flow bearish, then we can go short. So that's an idea right there. That's the three idea right there. Yeah, that's the day before. By the way, let's look at the non-farm payroll. Okay, the non-farm payroll is for on April 5th, right? April 5th, let's see, where is our April 5th? Here is the 5 minutes, but it's just for regular trading hour right here. April 5th. Yep. April 5th, we kind of have a late rally. We see right there, it bounced. But let's look at the 5 minute with the extended trading hour with this one. Okay, so where is our Friday? Today, look, extend Friday. Okay, so look at the day before Friday. Here's the Friday on non-farm payroll. Then look at the day before and look at the last hour. We do have a setup, do we? Here is huge breakdown. At this level, we can put a buy stop at this level right there. It's a weekly level, but we can trade that. See that? Because we do have a gap right here. You see it? Don't feel gap right there? Perfectly right there. Is this level? Yeah, we can enter at the level of this level. You see the gap down here, gap down, and then gap up, and that retest right there. Yep. You know, we can put a level right here. That's one of the key level. Yeah, so we have the same phenomenon right there. Okay, let's put that into our chart right there. So basically, we put right here. All right, we see the gap up, gap down, gap up, balance price range, and retest. That's the same setup. Yeah, we can mark our lead level, all this level. It's very subjective right here, but as long as we see the gap between them, the breakout level, then we're good. Yeah, let's go with the Dow close candle for now, because that's where we see things. 52.48. Let's give a special color. Yeah, this color. Okay. You see that? You see that level? Break out with a gap up right away. So balance price range and retest. perfectly. Yep. So we can use this. This is the day before. Day before non-farm payroll. We take this screenshot kind of late, but do we check that on? Yeah, let's look see if we check that in the real time. I mean, on the same day. Yeah, so basically we did not check the screenshot on that day, so let's do it now. So we can build up our model. So basically, you have a balance price range right there. So, alright, let's add this in pen. So, right here, we're gonna zoom out a little bit. Alright, let's put in the tag right here. So it's gonna be, yeah, it's not gonna be a full breakout for that matter, but actually it's gonna be balance fill color. Yeah, balance price range retest. Perfectly. This is the day before non-farm payroll, and it's the final hour. Yeah, that's the setup right there. The level is do a buy stop. $52.48. $50.15 right there. So you see the right here, the balance price range right here. What color is that? Yeah, yellow color. See the gap down, and then you have a gap up right there. And now it's just the retest. Yep, let's save this. Into our model. Yep, basically we have this model. So this is Thursday before non-farm payroll, and this is April 2004. Yep, so we got a model right there. Trade accordingly right there. Let's close this. Yep. So that's the model we're gonna try to build, and we're gonna trade that model only. All right. Now we look at the ICT setup. We may have the setup right here. The Judah swing. This model. Not the Judah swing before. Because if it's released the new, then that's the Judah swing. In this case, it's the Judah swing down. Yeah, let's take a look and see if we apply this model for today. So Judah swing down. Check out check down the low. Yeah, it did check out the low. Right, this model say that Judah swing before 9:30 check out the high. In this case, if you inverse it, is the bullish and is the bearish. But it's bullish, then it will check out the low down here. So you check out the low of the prior day, the previous day, and then it will go to a go to reverse, right? But it's not go reverse at all. It just I pull back and it stay back there. So it's not exactly, but if we can catch the move here, we still make money, right? The bottom right here, as soon as we see that it's breaking, fell gap right here, and then it gap up, gap down, and then gap up. As soon as we see it break down the level, put a buy stop right here, and boom, we have a trade. And then we target this level, which is a high time frame level right here, 1 hour. But the trick is, how do we go here? Gap down, gap up, but it never retests. We wait that it go here and retest right here for it to go. That will be a so-called head and shoulder pattern right there. Yeah, if we can catch that move. It's not exactly that model, I should say model 211, but it's covered. We cannot apply this model because the gap is not filled. The hip gap down, but it stopped at that. It's not gonna, and the gap is between the range. But in today, the gap is way down low. So basically, the gap down for today is huge. It's way out of the range of yesterday. So this. So the model, this model is it's not exact. The model 212, it's not exactly. Yeah, it did rate the previous day low right there, and then it bowed back a little bit, but then it's not reverse. It's just goes into accumulation right here. So tomorrow, the day after, we're gonna do two model. The first model is the day before, and the other model we're gonna do the day after. The day before and the day after, that's the model we're gonna do. Right, we do the model the day before, the day before. Oh, you know what? Now we see the day before. Let's do this. So the day before this, we will focus on the final hour. All right, we're gonna focus on the final hour, And the day after, the capitalize. The day after, with all of this. Yeah, let's do like this. So it's a high impact news. The market gonna move. How do we do that? We do the day before. We focus on the final hour. Final hour. Yep, let's do like this. All right. And the day after, we're gonna focus on the first hour, right? The day after, it's gonna continue the trend or it's gonna be reversed. The first hour gonna tell us. Then we just follow. Wow, that's a beautiful model we're gonna be when we have the high impact news release. Just trade with these two models. We will be great. High impact news. That's a beautiful model right there. Okay, so go back to the chart today. We don't see any setup in the ICT, one trade setup for light. Yeah, but if we look right here, we can put up a stop, like we said earlier. As soon as it dropped down, it can be caused a fall breakdown right there. So it's breakdown level and it got up and then it retests, but it reached back this order block right there with a gap. It never retests them. It retests right here and it bow backs. It retests right here. You see that it bow back again. But largely it's just in a range right there. We identify this range. You see that's it, the key level, breakout level right there, and it's largely it's around that range, and it's amazing. It's close within that range. When it's above that range, it got sell off, and excuse me, and it stay in the restaurant. On the last hour, we want to engage right here, but we're not feeling that it go into our expectation. We really want it right here. It rate the sell side, and it break this level. Then we can go long. Yeah, we know the playbook how the algo run, right? It rate the sell side equity. It create a fall break down or breakout, then boom, it reversed. We really anticipate that, but it did not. And we see this move right here, we feel the curve missing out. Because we're thinking about go long right here because we treat this as a breakout level right there, but it's not a really clear setup, so we didn't take the trade. But it turned out good, yeah, because this is not a reversal like like the last hour setup. Explosive like yesterday. See that? Yesterday, boom, boom. You see, it break out very clear. You see this level? It break it out with that level with a gap down, and then boom, it go up. But for today, we don't see that pattern. So we cap 6 out right there. Yeah, we can see that this is a breakout level, then it's the gap down right there. Yeah, I think that can be a valid trade right there. But we had to take the profit right away when it hit this level. Otherwise, just we just giving back. It's not gonna continually and take out the buy side. Is in the range. So it's very interesting. Tomorrow, I think we think that it's gonna make a big move because today is just accumulation after the new release. But if we look at the daily time frame, it's a huge Dow candle, huge Dow close candle. You see that? And we add a little bit, 20-day moving average. So the first time on Friday, you see non-farm payroll. That's the key level right there. Non-farm payroll is the first time it's close, below the 20-day moving average. When the last time it do that? None. You see, the last time it do that in January, man, 4 months, it just stay above the moving average. So this sends signal just that the short coming or the sell-off started, and today it's confirmed that. We believe that tomorrow it's gonna sell off, and Friday also. So let's wait and see. Let's look at the ICT weekly. See what is so maybe the bearish midweek decline, sell off. Basically, we basically get sell off on Wednesday right here. Consolidation and Thursday reversal. So basically today, Wednesday take the low of both Monday and Tuesday. So right here we have a Monday cap consolidation, and Tuesday it's drop up, and the last minute is short sweep right there, and boom, Wednesday drop. It take out a low of both. So basically it take out a low of both Monday and Tuesday right there. Take out a low, alright. So it may fit this model right here, which is the Wednesday right here. So looking for Thursday reversal. Basically it's May reversal, and then it sell off on Friday again. It kind of makes sense maybe. So if we look on Thursday, it may be open around here, go up, rate maybe it cannot, we don't know. If it go all the way up here, that's a huge move. But if it can go up and rate the buy side of the Wednesday and fill the gap right here, that can be a good trigger for to take a short right there. We don't have to wait. Maybe go here, or here, we can short right there. Or it's not gonna. It may, we don't know. We just speculate right here. It may go up here if the model right here say that it will rate all the buy salary liquidity from the high of the week. The high of Tuesday in this case, then that'll be great setup for sure. But if it's just in the mid here, we are perfect and ready to take a short also. So that's the thing that we are looking. All right, anything else we want to cover? By the way, today we don't see any real let's look at the weekly. Let's move this back to where it's be. Here's the daily. We go back to the daily. Here we see that the heel gap, and it's rebalanced that gap right away. I mean with Friday, and it kind of tricked this at a support level right there at that level. Let's see how this is gonna handle. But today it closed above that level. But it did great the sell side. So that can give a bullish signal to me right there. Yeah, anything interesting we have? Yeah, we have a gap down, gap up, and retest. We already talked about this, right? If we see this model right here, the setup right here. This is a breakout level. See the failure gap down, and then you have failure gap up, failure gap down again, and it's the retest. So we have a balanced price range retest right there. We can short right there. And here's the gap that is Corvallis is still respect this gap. So let's see. And here we have a gap right here also. Here gap right here. See that? It's not filling yet. This gap right here. Yeah, that's the gap. Look at that gap. Alright, now look at the weekly. See where we are with the weekly. So weekly, the key level right there. So it's the breakout level, and we have two candle close above, and then now it's go and break down that level, open above, boom. It will be nice if we see this candle break out two level, which is this level and this level. Then if tomorrow and Friday it break out this level right here, then we have a huge displacement. A displacement is the one that break two level, one and two right here. If this week break down this two level, then we have a displacement, which is ready to go short. So that's an idea right there. Whenever we have a displacement, a candle that break two level, then that's a valid displacement right there. I think we have some example of that, so that goes. Yeah, by the way, we have a example right here for a valid displacement. In this case, it's just 5 minutes time frame, which is the concept the same. So we have breakout level right here, 1 and 2 right here. So this Dow Glow candle right here, it break out those two level. Just one candle break out, then that is a displacement block right there, or failure gap. Not failure gap, but it's a displacement candle, and it follow through. You have a candle follow through, close below its level. So whenever it pull back right here, it's perfect for short sell right here. But right here for this candle, we see two breakout level right there. It failed to do that. It fell on level number 2. Number 1, it opened. Level 1 it break through, but level 2 it did not break through, and then followed by the candle close above level 2. Then that gives us idea that do not short on the pullback right here. But this is safe to to short them, and know that this candle is open above the breakout level, the same right here. So if we watch, it gives us a very specific idea that which displacement candle is a valid one. Then go back here on a weekly. If 2 more days, we have 2 more days. If the 2 more days, Thursday and Friday, it break out this level, then that means that one candle right here break out 2 level right here, 2 level. Then this is a valid displacement. Then when it pull back, it's very high, high probability that the pullback is just for smart money to go in and short them. Don't go long on a pullback later or retracement. So that's an idea. I think that's it for today, and thank you for your time and interest. We're very grateful for this opportunity. We do what we love, then success is coming our way. Bye for now and have a great evening.